check. 1 2 1 2. What's going on, everyone? Happy Tuesday. Happy Taco Tuesday. This is Jordan with Conquering the Markets. If you're new here, welcome. And if you're not, welcome back. We had to go live today. If you look at the markets, you can see that this is a massive risk-off day. Look to the right. You're looking at the NASDAQ down 1%, S&P down 500 down 1.5%. DXY has gone from unchanged, now barely negative, but you're looking at a bid into the Japanese yen. You're looking at, here's the Japanese yen versus the US dollar, bid to the Japanese yen. You're looking at bid to the Japanese yen, a bid into the Swiss franc. You are looking at bonds going bid. Here's the 10-year down almost 4% today. Look at oil down almost 5% today. Classic risk-off day. You're seeing gold bid, classic risk-off, except there's one outlier. Bitcoin and crypto are both bid. Now, if you were to tell me that, hey, listen, things are falling apart, we're looking at here an escalation. If you could see this morning, you could see the regional banks on the open getting absolutely crushed. Markets looking to perhaps sniff out who's next after First Republic just gone under. You were told that, listen, the crisis is almost over. There's nothing to worry about. Market is not buying it. Perhaps the market is actually looking to send Jay Powell a message ahead of tomorrow's FOMC. Hey, listen, this is one of the most interesting things I've seen this morning. It's not for tomorrow's meeting, which is pricing in an 83% chance, 84% chance. Next month's June meeting has gone from yesterday in just less than 24 hours, pricing in a 35% probability of another 25 basis point hike, to now pricing that completely out of the market and now pricing in a 19% probability that the Fed is forced to cut. A lot has happened in these last 24 hours. A lot has happened this morning. It begs the question, has the decoupling finally happened? Now, there's one thing that leads me to believe that's not the case. And when you look at Bitcoin and you see Bitcoin bid here this morning and you see the markets bleeding red, you see gold bid and you're saying, hey, wait a second, Bitcoin is starting to be a little bit of a safe haven here, just like gold normally acts in this situation. And if it were just Bitcoin today and we were seeing all coins potentially even bleeding out, I would be saying to myself, wow, the time has come. It doesn't look like that. It doesn't look like that. We're seeing, I mean, listen, it's still soon to make any type of judgments. And if you think that today is fireworks, wait till tomorrow. And which way those fireworks are banging tomorrow, I do not know. I mean, nobody knows. Jay Powell must be sweating right now. He must be sweating as he gets ready for center stage of the central banking system tomorrow. And the possibility remains that Jay Powell tomorrow, maybe he even has a surprise pause. I don't think that's the case. I don't think he paused without hiking tomorrow. But if he did, what is the market's reaction? You could see over on CNBC, this is what the world is reading. This is what, like, you know, the average normie is reading, and he's seeing, oh, now, you have to bear with me this morning. We went live, and while we're getting ready here to get the prepared for our session, we had to kind of like revert back and restart things. Apologize for that. We had some CTM 2.0 proprietary information being shared, and we needed to just restart that over here. So just give me a second here this morning. When we do get going, it's going to take, anyway, here we are, and it's a very important day that we are together to take a look at the market. So that's what I want to do, and I want to do it in a style that is just us here, heads down together, with no type of like time constraints, and we could just do what we do, and that's stay ahead if you look at talking about staying ahead, and I could just like, I could go back to January, right? And I could say, well, back in January when Bitcoin was at 17,000 or under it, we're looking for the bull market breakout. And then our whole way up, watching what happens, staying in front of it. Starting a month ago, we started talking about a coming liquidity crunch, to watch out for it, to watch the U.S. Treasury's can't balance sheet. Yesterday, Janet Yellen, now I don't believe her. Janet, there'll never be another crisis in our lifetime. Yellen, 2017, 2018. What was 2020, right? What are we dealing with the U.S. banking crisis that has just begun last month? Now, she's saying June 1st, around that date, is when the Treasury is going to run out of funds. And if the debt ceiling debacle is not situated by then, the U.S. is in, a situation where they could be defaulting. Now, she's probably just giving lawmakers a little bit of a push, right? So that they get this kind of tightened up so that it doesn't come down to the absolute last minute where mistakes could happen, right? I think it was President Obama who talked about, like, under President Biden, like, the room for those mistakes is definitely significantly greater than it's been in the past. I could imagine that things could happen. It could get, but we started looking at a topic. People call it a narrative. I don't think it's a narrative. It's what's happening. Right now, the U.S. Treasury is undergoing extraordinary measures. They're counteracting the quantitative tightening that's taking place. Now, in a short amount of time, we're forward-looking. The markets are forward-looking. CTM, we're forward-looking. Shortly by the summer, we're going to see the opposite happening. Instead of the U.S. Treasury counteracting quantitative tightening coming from the Federal Reserve, they're actually going to be tightening alongside them as they need to raise their cash balance. That could provide a liquidity crunch. A lot of people like to think the things as narratives. I think about what is happening. And you've seen over the last week a lot more attention headed this direction because this is what is happening. And then we were just, everyone a couple of weeks ago was talking about, well, alt season is here. And like, alt season is not generally when you see altcoins bleeding against the US dollar. No. Usually Bitcoin is bleeding versus alts, but alts are pumping against the US dollar. Just be careful over there. And then we called the top of the correction in Bitcoin over here. And then we're staying ahead of what's happening. Today we're looking at this risk off day. We're looking at the headlines. We're seeing bleeding red. We're seeing the VIX rising. Volatility's entering. People are kind of frightened ahead of tomorrow's event, and for good reason. If the Fed does hike tomorrow, I think this is, for tomorrow or Thursday's session, we're looking at the clock beginning to tick a lot faster on a lot of MicroStrategy. Did you hear that MicroStrategy announced that they really can't maintain the interest payments on their debt and are getting ready to potentially sell some Bitcoin? Things could get a little dicey. Let's stay ahead of it, right? Pepe's pumping. I wanted to read some headlines with you. We're gonna warm up into it all, and we see a big surprise here. Labor market in a free fall as job openings slide. Quits tumble to a 2-year low, right? U.S. core factory orders first annual contraction since December in 2020. Today's topic should be recessionary things. And we talked about 4 days ago, it's coming. Brace yourself. Storm on the horizon. Today it looks like to be really fitting into what we were looking at, what we saw come in, as we are seeing lots of signs here of moving from when a lot of people thought last year that we were entering into recession, that things were getting ready to break. We're like, well, hold off. I think nothing's going to break for a while. There's massive liquidity out there. And this is not a recession. And then, 6 months later, people got really understood that the economy is a lot stronger than they understood. But things are changing this morning. Things have been changing, and we want to make sure that we keep our thumb on the pulse of the market. We're looking at IBM. This is Signal over here. IBM to stop hiring for roles that can be replaced by AI. Nearly 8,000 workers to be replaced by automation. When ChatGPT first came out and people were having fun playing with it, I did note that you're basically training the algorithm that is going to replace your job. Now, people don't, anyway, we'll get to that years from now as it's occurring. Let's keep going over here. This is Signal. Mention, who cares? Life isn't fair. I'm not sure who you're talking to, but that's what I tell my kids all the time. Yeah, you know, just the other day we were celebrating, and we went to go get some cupcakes and donuts, and a friend in the car is like asking for something, and I'm like, no. And my daughter's like, she's like, that's not fair. My daughter's like, life is not fair. Yeah, my kids are, that's for sure. Life is not fair. There's no question about that. Mention, the markets are manipulated. How about that one? I mean, newsflash, the markets are manipulated. It is your job to be able to maneuver within that manipulation. It's why we're looking at the headlines now. We're learning to be able to, first of all, discern what's noise, what's propaganda, right? Like Kremlin mocks and dismisses White House's. Does this matter to us? No, that's noise. We don't really care about that. We are just like going through global banking language standards to tighten to great financial crisis levels. Well, that's something that's not noise, that's signal. Y'all think that we're headed for a pause and the tightening is about to come to a peak. No. The tightening is just getting started. Banks are no longer lending. Banks are like, they have the noose around their neck. We are looking at not only the Fed continuing. Now, tomorrow, if Jay Powell says, hey, listen, things are quite fragile. This house of cards is about to come down, and we are stopping quantitative tightening. We're no longer raising rates, and actually the market's correct, and we're going to begin cutting rates very shortly. That would be a game changer. But really what they're looking to do is two things. They're looking to keep the music playing as long as possible. They're not trying to crash things so that they have to come in with a massive liquidity expansion, which they will ultimately have to do if things break. What they're trying to do is obviously go ahead and inflate the debt away as best as much as possible without breaking things. And by the way, if you believe the CPI, which is astronomically high, I have to tell you, that's not really what it is. Credit tightening and weakening, economic growth in Europe and US will soon bring the pipe dream of higher for longer into contact with reality. With one part of the yield curve already making this plan, we're getting close to recession. If we're not already into recession. We have a couple other things over here. This is not so much signal, but something to keep in the back of your mind. Chegg shares crash as CEO admits the threat from OpenAI's chatbot. This is a company that goes ahead and does like helps you for studying, for final prep exams, things like that. And they're saying their business is crashing because of ChatGPT. I mean, it makes a lot of sense. I began prepping for a Series 65 exam. I went to ChatGPT and I was like, give me 50 questions that are going to be on the Series 65 exam. Take the test, it grades you. Whatever questions that you got wrong, it explains why you got wrong. You learn. It's much better. It's much easier, right? Anyway, let's keep going. Futures dip. This is Signal. Australia shocks with surprise 25 basis point rate hike after April pause. So we saw in April, the Bank of Australia moved to a pause, and we said to ourselves, just like when we saw them do a lesser degree of rate hike, that to us was signal that the Federal Reserve will then be moving from that 75 basis point hike, 75 basis point hike, 75 basis point hike, probably to a 50 and 25. That's what happened when they went to a pause. We said, It looks like we're getting closer to a pause, but now they surprise the markets. Australia shocks with a surprise 25 basis point because inflation's not going away. They need to get in front of it the best they could. Is this a signal? This is what I wonder. Is this a signal to the market that as the Fed gets ready to pause, they're just letting the markets know? By the way, these central banks, they work together in unison, coordinated action. Are they sending a signal that even as they move to a pause, that they won't go back to rate hikes? I don't know. We have to watch and stay in front of it. And then over here, you have Morgan Stanley cutting another 3,000 jobs as M&A activity sours. We are looking like we are headed towards, at best, a slowdown, at more likely a recession, and even potentially we are looking for that big deflationary shock, a market crash. If that happens, that's not what the Fed wants to happen. If that happens, they need to come in and they need a massive impulse of liquidity to go ahead and counteract that. By the way, the Winklevoss brothers, this is also signal. It's Coinbase, is looking at potentially getting out of the US. Here's Coinbase over here, by the way. But the Gemini brothers are launching an offshore derivatives platform as they are tired of the unclarity within the US. We are not seeing signs of the cryptocurrency space by any means, shape, or form, let's say, dwindling in growth. But we are seeing signs of that growth leaving the United States and headed elsewhere to more favorable jurisdictions. Let's start over here. This is oil, by the way, and you can see oil showing and pricing in very clearly a deflationary event, a slowdown, a global slowdown. Oil over here, I'm going to just jump over to the 8-hour, and you can see this trend line. By the way, we had like a false breakout over here in this area to the upside, and then close back below that trend line. I'm highlighting where that trend line is. Once we closed below it, it was buy, get back neutral. In this area that I'm highlighting, this is the lower trend line. This is a horizontal, and you can see this triangle forming. And then we moved after that event, we moved this trend line up here, and we said, I want to pay attention to what the market's paying attention to. We're kind of moving out this space. We now need to break above this line to look for any type of buy, and then targeting this upper resistance above us. But what happened was we broke down. Here was a breakdown. You see that price accelerated downwards and then came up to test the resistance. And as they tested the resistance, OPEC announced a surprise supply cut. And then you saw the gap up. And then people said the oil's going to 100. We're following the technicals all the way. You can see we came in and tested that line again, bounced, tested it again, bounced, and here was the breakdown. Breakdown is a sell event, came in for the retest of that line, confirmed that broken support into resistance, and is now resuming down. By the way, that is not inflationary. This is deflationary. This is going to be given as we move forward into the summer, likely signs that we are seeing headline CPI continue to fall and to come off. That is good news, in my opinion. Nevertheless, you're seeing a breakdown occurring in oil this morning. I want to start off with Bitcoin. I want to show you what's going on as we jump into the technicals. Now, Bitcoin is noticeable today and highly notable as we are seeing Bitcoin green again, along with gold, as we see the rest of the market showing strong signs of risk off. Whether or not that is temporary or something real, it's too soon to make that judgment. But we are going to look at yields and we're going to look at liquidity, and then we will see probably and likely why Bitcoin is green today. Before we do that, I want to just jump in and just remind everyone where we are. And that is, let me zoom out a little bit, right? We have this resistance over here that I'm highlighting at 25,000. Price was able to finally break above there. That was a major repair in the market. We broke above that and then came into the resistance here at 29,000. Consolidating here for about a week and a half, 2 weeks. finally breaking above it. This was the fourth major repair that took place in the Bitcoin market this year in 2023. Super bullish, but it wasn't able to hold. You could see that it broke down below that breakout. Here's the breakout, came in for the retest, bounced, and then broke down, right? That sent us neutral on the breakout. Then we had what was a breakdown of a trend line over here, 27,500. Short breakdown targeting this area, this last breakout that we had above 25,000. But that was nullified and back into this space over here. I'm drawing the triangle. Once it did, we were neutral again. Price then closed back above 29,000. That was again regaining that positive repair. We said that you have to stay on the right side, but at the same time, this is the part of the move that exhausts most people because they're not able to stay with it. And before we broke down again, just let everyone know that though there was a greater than likely chance that this is not going to be the one that takes off. Do not get exhausted. Make sure that you perform like an elite athlete, which means being prepared ahead of time. And then sure enough, we lost it again. That took us neutral. That wasn't a sell event. We said that would just mean like get on the right side, which means that you were neutral. And then what we did is we gave two areas that would be looking to buy or sell. You could see the trend line here connecting these peaks, one peak, two peak, just drawing in a buy impulse trend line. That's resistance. If price breaks above that trend line and closes, right? Now, if you see these little two peaks over here, if price were to break above here, intratrade, right? Here's the line. I'm not looking for price to peak above the line. Price breaks above that, not closing above it. At that point, I'm getting on the trade and taking the right side of that trade. Now, tomorrow's a FOMC. FOMC days are notorious for whiplashes. What's a whiplash? All right, let's just jump back over here a little bit. I'm going to go to a higher time frame. And coming into tomorrow's FOMC, you could see a big range. I'm going to probably make it bigger than it is. But you see over here, I just drew in that upper portion of the range and the lower portion of the range. What a whipsaw does, and it might not happen on the 3-day, where this is a weekly that I'm showing you 6 days of time frame. It might happen on the daily, right? But often what you see is price take out the upper end and then whipsaw, come all the way back down. When it whipsaws up here, a lot of people FOMO in. They think price is getting away with them, and they FOMO in, fear of missing out, and they jump into the trade. And then almost exactly as you take out the top there, then all of a sudden the bottom drops out. And those people are like, all right, well, don't worry, it's going to come right back. It was just very green. And then like they see it go red, and then it comes out and it takes out the bottom one. And when it takes out the bottom one, those people that went long here, they not only exit their trade, they're trading without a plan. They then FOMO in on the bottom side. And when they FOMO in the bottom side, almost instantly as they do it, price will then come in and will come up and whipsaw them. And they get wrecked. They would have been better off not doing anything, waiting for these massive shock waves to settle. But they think that you make more money in volatility, and therefore that they should be trading through this volatility, even though they have no business trading the market because they're a rookie and they don't have a plan. Now, with that being said, let me jump back. I was giving you what the risk was. What the risk was. So here we go over here, and we're jumping up. And if you were to take out this line, I would be going long. You see why I'm telling you ahead of that time? Now, two things are happening. You're getting above 29,000 at that point, which is a major repair, major resistance. That resistance goes back further. You could see over here that was during the Luna collapse, when price pierced below it into the Luna low, it then found support in that area, 29,000. That's the area that was resistance until we finally broke above. You go back further and you can see the touches into it. It's a major line. Above it, a fourth major repair of the year. you want to be long because we could be targeting up above us. We have resistance over here around 34,000. It's not drawn in. I have it drawn in on the log scale, but whatever. What I'm saying to you is the risk of a FOMC day, if that's happening, be aware, make sure you know where your stop loss is ahead of time. Now, my stop loss out of this trade, this is the top portion of a pendant. The bottom portion over here that I'm highlighting now, that's where we would be selling. And that's where I would have to manage my risk off at this point on a day like today, which means that the position size is going to be rather small. So rather than I risk 1% a trade, I risk 3% a trade, whatever your risk per trade is, it's not like, depending on how far away your stop loss is from your entry, that's how you're going to go ahead and size your position in proportion to your risk. Maybe Jim, it was, I mean, that's not here nor there today. I don't know that that's entirely true. I have it queued up for a session this week, but it's coming from, hold on, I guess we're doing this. I guess we're not. It's in my bookmarks. Hold on one second. Jim, I would love to do it with you right now. But if you go to their earnings, anyway, on Twitter, I'll be maybe retweeting it later, but likely for tomorrow or the next day, going into their earnings and to what they talked about, before they get ready to sell Bitcoin, right? They need to first make note of the fact that they might be looking to do that. It was noted. Right now they're bleeding cash, and whether or not their debt is due, they still need to make interest rate payments on their debt. So we'll see. I don't think in this particular juncture of the markets that the shorts need to kind of throw out any type of fear. It's all about the liquidity, follow the liquidity. That's what we're doing over here. I think why the shorts were extraordinarily wrong in this area over here, this was their opportunity, right? How many people were looking over here to go long? Anyway, neither here nor there. We'll look into it more. Shorts have been, or perma bears have been dead wrong throughout all of 2023. They have been as wrong as perma bulls were during this move down. They're both nonsense, right? Both permanently wrong. Hold on one second. I'm going to focus over here. Do not disturb. All right. All right. Let me go back to talking about before we get into Cardano or anything like that, what's going on in here. Bitcoin coming into what continues to be a pivotal event. We just went from having to position ourselves on the buy side here, discretionary, and now as you close below here, neutral. In this area I'm highlighting below, price closing below that would be a sell trigger. Why price remains above it, we are currently neutral, and neutral in this whole area that I'm highlighting. You can see that the upper resistance breaking above that, closing above that, and above 29,000. That signals a buy. Trading and closing below that, that would signal a sell. Right now you are neutral. A sell below here is likely, and that does not negate the incredibly bullish structure of the market, but that would put into play a test of that last repair coming in just above 25,000. Breaking below that, that's when we introduce what the bearish case for Bitcoin will be, because that sets up a potential test of what would be the bull market breakout trend line. If that were to break, this bull market breakout will be negated, and we could be looking at significant pressure on the markets. Now, why that would be happening, right? Right now, you could say, well, Jordan, it looks like things are under pressure and Bitcoin is trading up today. This is one day. If we're looking at any type of deflationary event, Bitcoin will not be immune. I do not believe so. Let's take a look at the NASDAQ before we move forward. NASDAQ over here, you can see that it has given up what was its last breakout. Here is, I'm highlighting these two green lines. This is a bull flag, right? Michelle, hat tip. The breakout above it, right, over here, that was a bullish extension targeting this area, this resistance above us. Right now, we are getting ready to close back within it. So that if you took the trade all the way up here, we pointed out the yellow line, the buy impulse coming off the bottom support and back above just under 13,000, this support we have over here. This is the entry, right? This is being early. Why this is late, it's still on the right side. And over here, you want to get back, if we close below, back neutral into the FOMC. Let's take a look at the S&P 500 as well. S&P 500, very similar structure. Let me zoom out and just give you a look at what's going on. Here we can see, let me zoom out, the whole bear market, right? Look at this line that I'm looking at over here. You can see that this looks really, really bullish. But every time we looked really bullish thus far is when the markets have come back in and slammed it back down. Are we about to make, coming into a potential one and done tomorrow, last hike of the cycle? Potentially, we saw the Bank of Australia going from a pause back to a hike. But as the markets will be concerned, if Powell says, okay, this is the last one, at that point in time, do we get this major breakout, or were people just sucked in? I don't know. That's why we need to stay on top of it and follow the technicals. And we had this last buy impulse, right? Coming into the resistance. That resistance above continues to hold. Here you can see that it's held all since last summer over here, August 2022. And above the magic number, 4,200, that would be the next opportunity for an extension. But right now, this still has a very positive structure to it. This is the breakout into resistance, right? Always discretionary. Take a small piece of profit off, but you're still above the trend line, and closing above that trend line, that still has you with a positive bias. I think that for this to get back bearish, we need to close below this trend line that I'm pointing out over here. This was a clone trend line over here, right? So, we're coming into the FOMC tomorrow. Probably better to be neutral. We are neutral across the board when we look at our positioning. Let me jump over here really quick. When we look at on the 8-hour time frame, whether we're looking at Bitcoin, which is currently neutral, Ethereum is currently neutral, and Cardano is currently neutral, that is a really strong place to be ahead of the FOMC. Someone was asking about the Cardano head and shoulders, right? And it looks something like this, right? Where here is the head, here is the left shoulder, and here's the right shoulder. So that's inverted head and shoulder. A head and shoulder is left shoulder, a head, and then a right shoulder. And then you take the neckline. If that breaks, that's bearish. Invert that, and you just flip it upside down on its head. And if this is the left shoulder, I'm going to draw this like this, right here, right? And what's interesting about this is, as this was breaking out, this was when we did it together on the live stream, and someone was pointing out that's a inverse head and shoulders. And the measured move, if you take the head to the neckline and then you flip it up here, it was coming into like 65 cents or 70 cents like that. And then it was funny because we said, well, it's not that easy, because you could break back below the neckline and then break back above and continue up. But most people will exit over here. And again, this is the portion that tires most people. And we pointed out to the DXY coming into the summer of 2021, which had a very similar setup. But what happened is you had a breakout and then a breakdown below the neckline. And then you had to move into that neckline twice, confirming it as resistance. And we're currently coming off break down below there, and that confirms that. As far as a CTM 2.0 perspective, we would be looking to go ahead, and if that were to happen, what I just showed you, that breakdown over here, that resumption down, we're very close to entering on the short side on Cardano. Cardano would likely be the first of the three to enter on the short side. You could see that Ethereum is much closer to re-entering on the shorts on the long side before taking up any shorts. Also, on Bitcoin is also much more favorable to the bullish side here than to the short side. So just let me go back to a discretionary standpoint with you and just point out that if we were looking at Bitcoin clearing above 29,000 and breaking out over here, CTM 2.0 will be entering on the long side. We could see the momentum here is to the upside. We're favoring the upside. If we discretionary look to take this counter trend trade over here into the resistance, that's not like CTM 2.0 will be on the sidelines. It's not interested in like taking bing, 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 bang, back and forth, back and forth. It's looking to trade with momentum. Momentum is very favorable to the upside right now. Cardano, you see, momentum is not only rolling over. During the bear market of 2022, right? Like Cardano was the weakest of the three. It was only short side trades. Bitcoin and Ethereum both had both on the buy side and on the sell side. So it makes sense if the market is indeed rolling over, that Cardano would be the one that was looking to take advantage of the short side first. If we lost 25,000 at this point in time, CTM 2.0 would also be looking to attack on the short side as well. Let me just talk a little bit about Bitcoin and Bitcoin's moves today, because one of the first things I wanted to do, because it says to myself, it doesn't make sense that we're seeing Bitcoin, Ethereum, Cardano, and cryptocurrency in general green along with Bitcoin. If we're looking at a risk-off move, why would not Bitcoin be green? If we're seeing a decoupling, that would make sense. But why are we looking at these other altcoins also green today? And one of the thoughts that comes to mind is, well, follow the liquidity. Well, what one thought that comes to mind was, well, maybe investors are kind of front running. They're looking at the regional banks under pressure. And because the regional banks are under pressure, maybe they're deciding that the next move by the Fed is going to be balance sheet expansion. And then you see some people in the crypto space kind of front running that. I mean, last time that happened, that was very bullish for equities as well. I don't know that that's the case or not. Come back over here, I look at liquidity, but this is lagging, right? Until tomorrow, we won't know. But over here in blue, we continue to see liquidity from the top four central banks, Bank of Japan, Bank of China, ECB, and the Federal Reserve continuing to come off, right? A lot of people, as Bitcoin was rising, right? January, February, March, they said, follow the liquidity, right? Liquidity's rising. That's why Bitcoin rising. We were like, oh, Bitcoin broke above 17,250 for the second time. That's the previous cycle ceiling. That's a bullish repair. Watch out for the bull market breakout. But they were like, okay, follow liquidity. But liquidity's coming out now the other way. And I'm not seeing any type of, awareness that, hey, wait a second, liquidity's currently going the other way. That's not favorable for crypto. So I take notes of those things in my mind, and I then discern to myself, well, who's noise and who's making things harder. But until tomorrow, we're kind of lagging here. It's not really much of a help for me. So the next thing, I went ahead and I looked at yields, right? We talked about and warned everyone in this particular move why Bitcoin was above 30,000, that yields at that point were rising. This is an inverse you're looking at. So you can see the tight correlation right now between tips and real yields. And I said, that's a warning. Last time that happened, it was Bitcoin that was wrong. This time it was also Bitcoin that was wrong. But since then, you saw Bitcoin rising as yields came off. So very quickly, that inverse correlation came back into play. And then over here, you see Bitcoin falling, right? As yields over here were rising. But today, you're looking at yields falling dramatically. So tomorrow, you're going to see this going up this way. And as you see this going up this way, what's Bitcoin should be doing? Well, Bitcoin should be rising, and Bitcoin's rising. I think this is why Bitcoin is rising today, because you're seeing yields come off in what is a very inflationary environment. And I think that is the reason why Bitcoin is rising today. I do not think it's because decoupling is taking effect. And I do not think it's because Bitcoin is becoming a risk-off asset. Now, I would love for that to happen. And I do believe one day Bitcoin will indeed be big enough and large enough to be the de facto risk-off asset. But I do not think that time is now. And that's probably not something that people like, but I think that's the reason. Noah, glad you're here. Really glad that you're here. People want to get out of banks and into gold and other potential more liquid assets. That's also a good reason. Obviously, Bitcoin is way more liquid than gold. That's a good one, unless you're talking about the paper gold, but I don't know. Let's keep going. That's where I think it's coming from. This is another view, Justin's view of that liquidity. And you can see liquidity rising today. Look over here in green, and Justin over here is accounting for three things. He's looking at the central bank's balance sheets. He's looking at the reverse repo market, and he's also looking at the cash balance of the treasury. So my question in my mind this morning was, where is the liquidity coming from this morning? Is it coming from the treasury? By the way, Janet Yellen said that we have to June 1st. I mean, we don't believe her, but the signal there is that the treasury's cash balance is on a clicking talk, and that is running out. Now, whether or not it's June 1st or it's, the middle of July, we really don't know that. But are we seeing in like lots of money from the US Treasury cash balance accounts this morning? And or was it the reverse repo market? Again, this is lagging, so we won't know until tomorrow. But if you look at what happened between the last day of April into yesterday, you saw funds moving out of the reverse repo. So we're seeing liquidity added into the markets. Or we'll find out tomorrow, and we'll check in tomorrow. Are we starting to see, as the Fed gets ready to pause market pricing and rate cuts, are we finally going to see a flood of money coming out of here? Is this money going into the bond market today? That's what it looks like to me. That's what's causing Bitcoin to rise, because we're seeing yields to come off. That's the way that I put it all together. But we'll continue each and every day to figure it out in real time, because that's what it is. It's just one gigantic puzzle. It's one gigantic puzzle. Thank God we have CTM 2.0 to keep us here on the right side. There's no question about that. Now, this is on the daily time frame I want to show you next. The daily time frame, we're actually seeing the beautiful dance take place. What is the beautiful dance? Now, daily time frame, Bitcoin is completely neutral and out of the market, right? By the way, how many people do you know we're going long down here, and why? Look how it completely sidestepped the US banking crisis, getting long when people thought that price was already way overbought, taking out two nice trades for the year. By the way, the win percentage is not 100%. I do not expect that the next trade is going to be a profitable trade on the daily time frame. But it's not that because I don't expect that, because probabilities don't suggest that, it doesn't mean that I omit that next trade. A mechanical system, you take each and every trade. It's the only way to go about it. This is the 8-hour time frame. This is going back over here since 2022. Bear market, not bad, right? For the last 15 months. Now, if you want to go back further, right, and you want to be able to have the opportunity to emulate these type of returns, notice that there's only a 40% win rate. That means I expect 6 out of every 10 trades to not be profitable, but I don't get to pick and choose which of those trades I end. It's non-discretionary. It's mechanical. You could see Bitcoin on the daily on the sidelines, but we have the beautiful dance taking place in that Ethereum is short. I mean, currently a 0.4% against it, and Cardano is long, currently 5% for it. So we're completely hedged on the daily time frame going into the FOMC. Bitcoin's neutral, Ethereum's short, and Cardano's long, which just leaves us hedged. And that's a good place to be into a high impact news event that we don't know. I like it better on the 8-hour time frame. Normally you see on the 8-hour time frame these kind of front running, holding open positions into profit ahead of the FOMC. This time they all got neutral. And that's a position of power. Being on the sidelines is a huge position of power. Knowing when to be in the market, when out, and on what side, that right there is the holy grail. One of the things that I think that I wanted to instill upon you today, for those of you out there who really are having a plan to trade, you spend a lot of time analyzing the markets, you spend a lot of time developing your technical analysis skills, and you probably have gained a lot of knowledge, a wealth of knowledge. You don't spend enough time on actually developing a plan. And if you're out there trading discretionary, one of the best things you could do is begin tracking each and every one of your trades and reviewing them, of course, on a weekly, more importantly, on a monthly and quarterly basis. If your win percentage should mimic that of CTM 2.0. Here's on the 8-hour on Ethereum, coming back to 2017. Well, let's go back a lot closer. Let's omit the bull market. Let's look at the beginning of the bear market, right? And you can see a 35% win rate. If your win rate is 70, 80, 90%, that is a gigantic red flag. Unless you're some type of high frequency algorithm that's front running order flow, your win rate should not be that high. Most failing traders have an abnormally high percent profitable. If you want to be able to improve your overall trading, it's a matter of having a lower win percentage and a higher risk to reward. If you look at the risk to reward on this, let me just show you the same thing, right? If you look at the average winning trade is 23% and the average losing trade is 3%. Do you see the risk to reward and how great it is? It's the same thing across all of these. If you look at Bitcoin, right? And if I look at the performance and I could say that the win ratio is 40%. By the way, look at as you traded through two bear markets, two 75, 85% drawdown, a 60% drawdown. Look at the drawdown, but more importantly, look at the win ratio. It's 40%, but look at the average winning trade is 10%. Average losing trade is 3%. Look at the favorable risk to reward. That changes if you add in, obviously, the bull market. That's what you should be aspiring to. Take what is a highly successful mechanical system and in your discretionary trading, try to mimic what is the core of that, and you're going to improve your discretionary trading. Tomorrow's a big day. Tomorrow's a big day as we enter into the FOMC. Let me go ahead and pause 1 second because it's Taco Tuesday. I want to go ahead and play a little bit of Head Snack. I'm going to drop this beat. It comes out hard right here, so just be ready.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horn.
By the way, Head Snack gave us not only, by the way, the Conquering the Markets theme song, Head snack also, if you remember, I'm going to play it really quick because it's awesome and just to help you understand what head snack has done for us. Head snack also gave us that beautiful beat over there. And he just released his new album on the 28th, right? He's got Chuck D. He's got Chuck D out here. If anyone is interested in streaming some of Head Snack stuff, I'm going to go ahead and include the link for you right here in the chat. All right. Question was joining CTM 2.0. Right? What's going on over here? Do I just have the ability to follow it or a deep explanation of what is going on? Look, as you join in the CTM dashboard, you come down over here and you're going to see an overview of conquering the markets. And in this overview, it's going to explain to you CTM, right? The different components of CTM, right? If you're just joining us, those who are just starting, CTM Core, those within CTM Core who run the summit team, helping everyone else get to the peak, the summit of the mountain, the dev team and the coding team behind it, and the relationship on how they all work together to form CTM 2.0, right? Everyone on CTM Core, they have a very deep understanding of these advanced strategies, exactly how they work. But someone just joining us, no, you're not going to receive like the holy grail and how it works, like for the price of admission. No, some type of relationship and trust needs to be developed, and we need to see what type of talent you bring to the table to see whether or not it is something that could help the team in the long run. So no, you get to work alongside what is like, I don't know anyone else in the space doing work remotely comparable to what we're doing, but the attitude of you have people on the summit team, people on the dev team, people on CTM Core who are readily like willing to help people understand what it takes to be successful. And they do that for the understanding that iron sharpens iron. And the person that we're helping today, they might become tomorrow a pivotal piece of the whole community. So that's what we're all about. We're all about taking all of us and each other with us. All right. So we're Gen X. We're Gen X, you know? All right, big day tomorrow. I mean, fascinating to me. The most fascinating thing to me today is how the markets went from pricing in yesterday a 35% chance of in June a 25 basis point rate hike to now outpricing that to zero and then beginning to price in a 20% chance of a rate cut in June. So tomorrow, Powell's probably going to, it looks like tomorrow it's 25 basis point hike and then pause. That's what the markets are pricing in. That's likely what Powell's going to deliver. If he delivers anything else, including he doesn't hike tomorrow, but moves directly to a pause. If he says that quantitative tightening is coming to an end, those are major, major differences the markets are not expecting, as well as if Powell kept the June meeting a live meeting, that saying that and alluding to the fact that they might potentially hike in June, that it'll be data dependent. All those things could drastically cause a further repricing in the markets. It looks like today that the markets were trying to send Powell a signal and trying to tell Powell, hey, listen, you're done. What Powell is going to do, that's a different story. We're coming into tomorrow's event from a position of strength. We'll take it as it comes. It is the markets. They are incredibly difficult. If someone is telling you they know for certainty what is going to happen, they are lying to you. They have no idea. Right now, the best lesson that you could have is that going forward, as this monetary reset is happening over this decade right here, in these unprecedented times, the best thing you could do is really just have a very cautious approach. We got a lot of good stuff in the week ahead. I look forward to sharing it with you. That really surprised me. Massive, massive, massive difference. Is there anything else I'm missing or missed today? Before we get off, let me know. CTM proved me wrong so many times. I'm done relying on my emotion-based trading systems. Jacob, that's the beauty of first of all, of trading discretionary alongside CTM 2.0. Because over a period of, you can't jump into CTM 2.0. You don't have the same experience of those that developed it. That it took 3 to 6 months for them to learn that they're not going to outtrade it and that it is vastly superior in every market circumstance. And those market circumstances have included things like the US banking crisis right over here, and all of this craziness. But if you're just joining, and by the way, we're looking at thus far, this move up on Bitcoin today is just coming back into that resistance that I'm highlighting right over here. We are neutral ahead of the FOMC. It is by discretionary trading alongside it, it's going to probably hasten the time that you realize that you need to commit fully. Within 3 to 4 months, I am pretty sure that everyone that will have come to the realization. And that's an important part of the process. You can't have someone tell you. You need to know and learn for yourself. That is the most important. All right, everyone. Thank you, Ace. I appreciate that so much. And you are a giant to work alongside. Everyone, have a beautiful, beautiful day. All right. I'll see you all tomorrow, and we'll take it one step further. Have a beautiful day, everyone. God bless you. I'll see you all later.